to know the financial condition of the firm.
Financial condition of the
Firm.
what happened, sir? Hello. What happened, sir?
I don't
sir.
know.
Maybe
I
Sir
don't know
got
what happened.
disconnected.
Just I connected back. Okay, what happened? I don't know.
Okay,
Just
sir.
got disconnected. So came back. Okay. So third objective of the third objective for the third purpose or the objective to prepare financial statement is to access the financial condition of the firm. Say yes or no?
Yes, sir.
Next objective is to anticipate the working capital position. Anticipation is nothing but predicting the future. What happens next? So today you can anticipate. Unless otherwise you know the changes in the working capital for today, tomorrow definitely you can predict it, right? Because you know how much fund is going to come, how much fund is going to pay tomorrow, because you sold goods on credit basis so that you are having data. You purchased goods from your creditors so that you have to pay, so that tomorrow due date is there for the payment. So tomorrow you know how much amount also come, because due dates from your data also will be there. So whenever you want to anticipate the working capital position for next day, for tomorrow, for the future, there is a requirement to prepare the funds flow statement. Anticipating working capital position. To know current day working capital position also, there is a requirement to prepare the funds flow statement. To anticipate, to predict the future also, there is a requirement to prepare funds flow statement. Say yes or no? Say yes or no?
Yes, sir. Yes, sir.
So the fourth objective to prepare funds flow statement is to anticipate the working capital position. Then next objective for the preparation of funds flow statement is to reveal the most important changes.
To reveal
The most important changes. To reveal the most important changes which are taking place during the accounting period. To reveal the most important changes which have taken place during the accounting period. The accounting period, what kind of changes have been taken place? Which are the changes taken most of the times? So data for changes acquired. How many changes have been taken place in the data? Or data changes have taken more place? More changes have been taken place. Or in the cash position have taken more changes? Or bank balance taken more changes?
okay.
In the closing capital changes more changes taken more changes, or in bills taken more changes, prepaid expenses have changed more, or advance incomes or advance expenses. Incomes means receivables have been changed. So in what fund, in what item changes have been taking place more in this accounting year, or a particular accounting year, or a particular period? To know that, there is a requirement to prepare the funds flow statement to reveal the most important changes which have been taking place during a particular period. That is the other objective of the preparation of funds flow statement. So last but not least, the objective for the or purpose of the preparation of funds flow statement is to provide a basis for budgeting. To provide a basis for budgeting. What do you mean by budget? Budget is nothing but a future plan of action, a future plan of action for your organization. So budgets, each and every organization, if based on the size of the organization, they will prepare the budgets. So many organizations will have many budget centers also. Budget center is nothing but along with the master budget. Means master budget is nothing but the budget for a whole organization. But size of the organization little bigger, definitely various departments will be there. Like sales department will be there, production department will be there, marketing department will be there, finance department will be there, accounting department will be there, HR department will be there. So each and every department will prepare their own budgets for the next accounting year or the next financial year. Then those budgets will be submitted to the means sales department is there. So sales department will prepare some budget. So sales department want to achieve this much of sales for the next accounting year. For that purpose, what kind of requirement they need, what kind of expenditure they are going to make. So they prepare a plan of action in terms of money. So not only just writing a plan, which plan, that plan requires some budget, some amount. So any plan of action for the future mentioned in numerically or in the form of money, that will be called as a budget. So sales department, one budget center. Marketing department, one budget center. Finance department of a budget center. Production department, one budget center. So if you take production department as a budget, production department also may prepare two place budgets also, many budgets also. For example, material budget, labor budget, overhead budget. So our production department will give budget. So production department know what is the capacity of their plant. Based on that, how much capacity they are utilizing, they know. They want to increase the capacity. For that purpose, new machinery to be purchased or existing machinery to be means some extra part to be added to the existing machinery. There are places. So whatever, based on that, what is their target? Based on that, budgets will be prepared. So always budgets will be prepared based on the past data. For example, this year we produced 5,000 units. Next year I want to produce 6,000 units. For that, already how much expenditure taking place for the 5,000 units production I know. Based on that, 6,000, 7,000, 8,000, 9,000. How many units you want to produce for the next year? You can prepare the budget. So how much it is required for the material, how much is required for the labor, how much is required for variable cost, etc., etc. So a prepared budget will be prepared and will be submitted to the finance department. If you get the approval, then you get that you can go for that plan. Am I right or not? So each and every budget center will prepare the budgets. Those will be submitted to the officer called budget officer. That person will have a committee. If committee is accepted your budget, then you get the approval from the officer. Whenever you get the approval from the officer, then you can go for the that plan into action. So whenever you want to provide basics for the budgeting, some information for the budgeting, funds flow statement also required. So funds flow statement will provide basis for making budgets. Say yes or no? So some budgets will be, many types of budgets will be there. Most popular is zero-based budgeting or fixed budgeting or this, flexible budgeting. Fixed budgeting is nothing but once you prepare the budget, got approved, then you cannot cross that. You have to be in that only. Flexible budget is nothing but based on the changes taking place in the market, you can change small changes in the budgets also. That will be called as flexible budgeting. For example, you are thinking that if my production is increasing from 5,000 to 6,000 units, material cost may be increased for 2%, labor may be increased by 2%, like that. Some flexibility will be there. You can make changes. You can make changes from the past data. Last time 100 rupees kg material, you are predicting that 10 rupees may be increased, so that you can take 110 into the next preparation of the budget for the material cost per kg, like that. So fixed budget means how much spend, how much that much will be. Last time 100 paid, so this time also 100. That's it. Not to be the flexible fixed budget. No. Some flexibility will be there for the increase or the decrease. Then that will be called as flexible budgets. Say yes or no?
Okay.
So these are the objectives, some objectives of the funds flow statement. So to know the changes in the working capital, to understand the working capital position, to access the financial condition of the firm, anticipate working capital position, then important changes, and last one is
Reveal
the
the important, most important changes.
most important changes which to be taken place during accounting period, a particular accounting period. Last one is the provide basis for the budgeting. So provision for basis for the budgeting. These are the objectives. So whenever asked theory question asked, you can write easily meaning of budget, narrow sense, broad sense, and popular sense. What is the concept of fund flow? Fund is what? Flow is what? Flow is change. Fund is means cash. Okay. Meaning of fund flow statement. So changing the financial position between the two balance sheet dates by showing sources and application of fund. Then these are the objectives. For that, one critical question will be complete. Say yes
Sir,
or no?
sir, repeat the question, sir. What could be the question?
Question can be what is funds flow statement and explain objectives of funds flow statement. Simple.
Fund flow statement. Oh, shit.
Next, I'm going to explain what is the importance of funds flow statement, or uses of funds flow statement, or benefits of funds flow statement. Anything is asked the same: importance, uses, benefits. What is the importance of funds flow statement? Same answer, same thing I'm explaining. Uses of funds flow statement, same thing. Benefits of funds flow statement, same thing. Okay, so various users will be there for the accounting information. I said, am I right or not? So shareholders, one of the kind of interested parties in the organization, or stakeholder. Debenture holders will be there. Creditors will be there. Creditors can be short term or the long term creditors will be there. Bankers will be there. Financial institutions will be there. Management will be there. Okay, so they all will use the accounting information, especially who will use the fund flow statement. That is very important for us. Okay, so funds flow statement is a important management technique actually. Management technique for the financial analysis. Funds flow statement is very important technique of financial statement analysis. It supplies various information, good information to the interested parties like shareholders, management, creditors, bankers, etc., etc., etc. So first we discuss shareholders are the original owners of the company. Shareholders can be two types of shareholders: equity shareholders and preference shareholders. You might know. Equity shareholders are original owners of the organization. Preference shareholders are not owners. They are the investors into the organization, because preference shareholders will have some preferential rights. So when preferential shareholders are having rights, what kind of rights they will have? They will get dividend first than the equity shareholders. First have to pay dividend every year to the preference shareholders first, then how to pay the equity shareholders. Whatever dividend preference shareholders will get, that is in a fixed percentage. If profits more, less, whatever, situation will be the same. Payment of dividend will be the same person. Whatever percentage of dividend mentioned at the time of selling preference shares, that much only will be paid irrespective of the increase in the profits. Okay, so when company is going to be closed, capital invested by the preference shareholders will get back faster than the equity shareholders. These three preferential rights will be there for the preference shareholders. Are you getting?
Okay.
So one is getting dividend first than the equity shareholders. Second one is the fixed percentage of dividend. Third one is the getting capital back first than the equity shareholders when company is going to close. So if these preferential rights are not there, then that will be called as equity share. Equity share, which is not a preference share. Simple meaning is given by the Companies Act. Equity share, which is not a preference share. Simple. But then you have to understand what is a preference share. Preferential share holders will have preferential rights. What are preferential rights? Getting dividend first than the equity shareholders, getting dividend in a fixed percentage irrespective of the profits. Then last one is the getting capital back, investment back first than the equity shareholders when company is winding up. Say yes or no? Then now I am not differentiating here regarding the funds flow statement for decision making. I am taking only share. I am calling only shareholder. Say son, previously one more kind of shares also issued by the company, sweat equity will be called. A sweet equity also will be called. What do you mean by sweat equity? These are the free shares will be given to the board of directors, or the promoters, or employees to the company sometimes also, because of they at the time of incorporation of the company, promoters have taken much pain in the establishment of the company, so that some amount of shares will be given freely to them. Those will be called as equity sweat equity or sweet equity. But those are kind of shares cannot be issued now. Companies Act prohibited issuing of these shares. Only two types of shares can be issued: equity and preference shares nowadays. Say yes or no?
Yes.
What is the usefulness of this fund flow statement to the shareholders? First we discuss. So I'll give 3 points here. How many points I'm going to give for the usefulness of if funds flow statement to the shareholders? 3 points I'm giving. So whenever funds flow statement is prepared, it will provide information to the shareholders regarding the availability of funds in the business. So if funds are not available in the business, shareholders may not be continued as a shareholder, because if funds are not available, meaning is that company is going to, our organization is going to get losses, are going to close soon. Am I right or not? So funds are not there, no payments either to the creditors or to the shareholders. That is the reason shareholders will take a decision. If funds are not available in the organization, they will quit from that organization by selling their shares in the stock exchange. Am I right or not? So whenever they want to take a decision, they will see trading account, income statement, as well as the balance sheet. Along with those, funds flow statement also will be observed by the shareholders to know or to gather information regarding availability of funds in the business. Say sir, no?
Okay.
Then.
So, this, if you have this material, then you can send to us, sir, because
So
it
I
is
don't.
very beneficial
Sir?
to us. It is most beneficial to us, sir. We
Yes,
will
yes,
share to
definitely.
you
If I
so
get
that.
it, if I able to send it, I'll send. There is no issue. Okay, later.
Okay, okay, sir.
Okay,
Okay.
okay. So,
Ji. हाँ जी.
first usefulness of funds flow statement to the shareholders is to get the information about the availability of funds in the business. Second usefulness to the shareholders is to know, to estimate, to understand the earning capacity of the business. Why shareholder has to know earning capacity of the business? Earning capacity of the business. So funds flow statement will indicate the earning capacity of the business. So earning capacity, how, when I do the business, when I do regular activities, more purchasing and selling, etc., then only income will be generated. By having more assets in the organization may not generate any income. Am I right or not? So I purchased asset and kept in the office. Will not generate any income. But if you have working capital, flow of fund, inflow of more, outflow more, inflow more, outflow more means, so flow of fund only will generate the revenue for the organization. So that funds flow statement will indicate the earning capacity of the business. If business is earning more, then shareholder will get more benefit in the form of dividend. If business is earning less, shareholder will be in the loss, because he will get the less amount of dividend or no amount of dividend sometimes. Because profits are there, then only dividends will be issued. No profits, no dividends. Am I right or not? But sometimes what happens here is,
हाँ जी.
what happens in the organization is,
क्या
or
बोलो?
so major types of organization will prepare dividend equalization fund also. What do you mean by dividend equalization fund? Whenever less profits have come in an account, any financial accounting year, if profits come less for the organization will not pay less amount as dividend, because last year paid more, current year paid less, means shareholder get offended and will sell the shares. company will get lose. Company will get the loss. That is the reason company will not lose the shareholder. That is the reason some extra fund will be created out of the profits. Whenever company earned more profits, all profits will not be distributed among the shareholders as dividend. Some profit will be kept aside. So one of the fund will be created called dividend equalization fund. Means whenever company got less profit, then same amount of dividend which is announced in the last year to be announced this year also, because I don't company does not interest to show will not interest to show any losing shareholders. That is the reason from that fund amount will be taken, same amount of dividend or let little more percent of dividends will be announced. That will be called as dividend equalization fund. Yes or no? Hello.
Okay, sir. Carry on, sir.
So third kind of use of funds flow statement for the shareholders is, so to know ability of the company to pay the dividend. So whether company is going to pay the dividend or not to the shareholders. So first, how much fund is available in the organization. Number two, what is the earning capacity of the business. Number three, whether company is able to pay dividend or not to the shareholders. So these three informations will be collected by the shareholder from the funds flow statement. Funds flow statement will provide these three kinds of information to the shareholders. One is availability of funds in the business. Number two, earning capacity of the business. Number three, ability to pay the dividend by the firm. Say yes or no?
Okay. Related to say the
Then these are the benefits, are the uses, are the importance to the shareholders. Then one more type of loan providers are the credit givers are there for the organization in the form of creditors or in the form of debenture holders. So creditors are the person who provide credit to the organization. Credit is nothing but, okay, for example, a simple example and give for the creditor. Company wants to purchase something, that purchased on credit basis. Other person, the seller is accepted to take payment later date, in the future date. Then that person will be called as a creditor for the organization. So creditors are the persons who provide credit to the organization. Debenture holders are the person who purchased. For example, what do you mean by debenture? Debenture is a certificate issued to the person who provided loan to the organization. For example, I need 1 crore rupees of a loan. So financial institutions are not interested to give that much loan. Then what I do, total amount of the loan will be divided into small units. Then I'll offer to the general public. Those who are having small amounts of savings can come and invest it. I'll give a certificate to you. Those people will be called as the debenture holders. Debenture holder is nothing but by issuing debentures is nothing but collecting loans from the general public in small amounts. Okay, na? So for creditors and debentures also some usefulness, some benefit will be there because of this funds flow statement.
okay, carry on, sir.
Okay. So what is the first benefit to creditors and the debenture holders? Whatever money collected or borrowed from them, whatever money borrowed from them by that company, whether that company utilized or not, they will come to know. If company is not utilizing, they may not get interest. Shareholders will get dividend. Creditors and debenture holders will get interest. Debenture holders will get interest. Whatever percentage mentioned at the time of taking amount from them by issuing certificate, on that certificate, debenture certificate only, percentage of interest will be mentioned.
Okay.
Okay, na? So company they will understand by seeing the fund flow statement how much amount borrowed from them that is utilized by the organization or not. So how much amount is taken, whether that amount is invested or not. That much information will be known by the creditors or the debenture holders by seeing the funds flow statement. Then one more information they'll get from by seeing the financial funds flow statement. Who this creditors and the debenture holders, whether company is in a position to repay their amount. Okay, na? So one is whether company utilized their borrowings on amount borrowed from them or not. So company borrow or no, whether company able to repay back or not. Okay, so these two benefits will be there for the creditors and debenture holders with this funds flow statement. Say yes or
Okay.
no?
Yes.
Coming to the usefulness relating to others, who bankers, who financial institutions, etc. So debenture holders are the persons who provided loan to the bank in small amounts by taking a certificate from the company in the form of a debenture certificate. Then short-term loan providers, long-term loan providers will be there. What do you
Yeah.
mean by short-term? The loan provided for a 1 year period will be called a short-term loan period. If 12 months period the cross, then long-term loan providers will be called. Most of the times, individual provide loans will be called as a creditors. Institution provide loans will be called as most of the financial institutions like banks. Am I right or not?
Yeah.
Okay, so for these also long term or this bankers financial institutions also will estimate the two things same I explained it relating to the debentures even how much amount is borrowed from them whether that is utilized or not. Second one is the whether company is able to repay back or not.
Situational.
Situations. Okay, so the same two utilizations, two useful uses are two important, two benefits to the bankers also the same for the debentures and creditors, bankers all combined you can write it as one item even. Okay, so
Yes.
useful to the creditors, bankers, financial institutions, and debenture holders. For all, only one thing: whether they utilize company utilized borrowings from them. Number two, whether company is able to repay back or not.
Yeah.
Okay. Then much will be benefited because of funds flow statement is management. Okay. So along with these people, management will be get a benefit, much benefit from this finance funds flow statement. What kind of benefit will have by the management? Number one, management can plan temporary investment of funds. So working capital is more, huge amount of fund is there with the organization. Then company will go for the other kind of investment. Planning temporary investment of fund. If excess funds are available with the company, working capital plus my positive working capital is more. Then means what is mean by more positive working capital? Means company
More.
having enough funds, but
Enough.
not required that much.
Okay.
Those excess funds will be invested in other form. Can make fixed deposits, can purchase short-term bonds, can purchase short-term government bonds, etc., etc. Because on that fund, excess fund also company will generate revenue by investing outside the organization instead of inside the organization. Okay, na?
Okay.
So first use of the benefit relating to fund flow statement for the management is planning temporary investment of funds.
Planning.
Planning temporary investment of funds. Okay, na?
Investment of funds.
Planning temporary investment of funds.
This is the benefit, no, sir?
Benefit for the management or useful for the management or the important factor to the management. Importance to the management of funds flow statement. Importance of use of benefit. Three are the same.
Okay, sir.
Then, what is the second benefit we'll have by the management is evaluating the proper utilization of funds. Evaluating proper utilization of funds. Evaluating proper utilization of funds. Say yes or no?
Okay.
So unless otherwise knowing how much fund you are having, then you cannot plan for the utilizing. Am I right or not? So whenever you want to know how much fund you are having, then you have to prepare the funds flow statement. Okay, so once you prepare the funds flow statement, management will come to know that how much fund is having by the organization. Then company will go for the proper utilization. Always fund will be scarce resource for any company, any organization, at any firm or any individual even. Am I right or not? So scarce resources to be utilized optimally. So optimum utilization of fund will be taken because of preparation of fund flow statement.
This is That was the third one, sir.
Same, second one only, evaluating
Second
proper
one,
utilization of fund,
yeah.
optimum utilization of funds, if you want to say in simple.
Okay.
So whenever company wants to, management wants to take a decision about the optimum utilization of funds, they have to know how much fund the company is having. For that, they have to go for preparation of funds flow statement.
Okay, sir.
Say yes or no?
Yes,
Then
sir.
next one is the third one. Third benefit for the management or the use for management is formulating sound dividend policy. Formulating sound dividend policy. Dividend policy is what? Unless otherwise you are having a sound dividend policy, shareholders will not continue as shareholder for the longer period.
Okay.
They keeps on selling your shares in the market. Whenever your shares are trading in a stock exchange regularly, your share value will come down, you know.
Yes, yes. Sometimes up,
That is the
sometimes
reason you have
down.
to go for the proper dividend policy. Means you have to give good dividend to the shareholder. When they are earning in the form of dividend, they continue as a shareholder for the longer period. So continuous trading is nothing but your company goodwill is coming down. When company goodwill is come down, 100% share value will come down immediately in the stock exchange. Right or not?
Yes, sir.
So formulating sound dividend policy is the other benefit for the management. Next will be estimating future working capital requirement. Estimating future working capital requirement. So how much working capital is required in the future? Because you
Estimating
know,
future.
estimating future working capital requirement.
Okay.
This year I know what is the working capital because I prepared the funds flow statement. Because of that, I got these benefits or I got these loss. So next year, my working capital position must be this. This is my requirement. I want required. I am required this much of working capital for the next accounting period. How can you estimate unless otherwise you know the present working capital position? Okay, na?
Yes.
Estimating future working capital requirement. Then next to use benefit for the management here is he can test. He can test whether working capital is effectively utilized. ఉత్తనే పదను ఫ్రీ ఫండ్స్ పెట్టేసామా లేదు అంటే ఎఫెక్ట్ గా వాడామా. సో టెస్టింగ్ వెదర్ వర్కింగ్ క్యాపిటల్ ఈజ్ ఎఫెక్టివ్లీ యూటిలైజ్డ్. టెస్టింగ్ వెదర్ వర్కింగ్ క్యాపిటల్ ఈజ్ ఎఫెక్టివ్లీ యూటిలైజ్డ్. What is mean by effective utilization? Means getting benefit, much benefit from the working capital. Sometimes what happen, flow of inflow will be more, outflow will be less, remaining all fund will be go waste. Just account lo just amount will be there in accounts only. So amount is there in the bank account, mean nothing will give. Bank what give in the current accounts? Bank will charge for the maintenance of account. Bank will not give any interest. That is the reason just keeping the amount, keeping the fund in the bank account is not good. That is the reason how to use effectively to generate the revenue for the organization. So that management will test that organization working capital is utilized effectively or not by preparing this funds flow statement. Say yes or no? Then whenever company is having more working capital or the working capital not having any use, then company goes for the purchasing of assets. So when you are having much working capital which is not required, then that excess amount will be utilized for the purchase of assets, taking appropriate decision regarding purchase of assets. Taking appropriate, next benefit is this, taking appropriate decisions regarding purchase of assets. Whenever company wants to purchase assets, company will see the working capital position. So working capital is more, not required that much. That excess amount can be utilized for the purchasing of assets. Say yes or no?
Yes, sir. Sir, are you recording this, sir, class?
Sir?
Are you recording this class?
No, I am not recording, sir.
Okay, sir, no problem.
So might be university recording, sir.
Okay, then I will request to them.
I am not. This is on the live streaming also sometime. I think.
Okay.
Okay. So you on YouTube also running this class, I think.
Okay. Okay. Sir. Carry on, sir.
Then next benefit for the management area is identifying unnecessary investment in fixed assets. Identifying unnecessary investment in the fixed assets. Unnecessary investment in the fixed assets. Fixed assets means asset is nothing but that is one of the source of revenue. Asset is nothing but any item generating revenue in the future, that will be called as asset. I purchased the asset, but now that is not generating any revenue, then that will be called as unnecessary fixed asset only. So whenever you want to identify any unnecessary fixed asset is there with you in your organization, then there is a requirement to prepare the funds flow statement. By preparing funds flow statement, you can understand any asset is unnecessary in the organization. So identifying any unnecessary investment in fixed assets. This is the other benefit for the management. Then next benefit for the management of funds flow statement is understanding the reason for financial difficulties. Understanding the reasons for financial difficulties. So what kind of financial difficulties are facing by the organization can be known by the management because of this funds flow statement.
We can justify in the problem, sir, this kind of things.
You can identify the problem.
Okay.
You can identify the problem. You cannot rectify it.
Okay. Okay, sir.
So identification will, after identification, then you go for the litigation measures. For that,
sir, example, sir, one transaction we can.
So for example, so I purchased, financial difficulty is what, unable to make payment, right? On time, not making payment. So when you can make on time payment, when you are having fund, when you are not having fund, you cannot make payment on time. Whenever you won't make payment on time, creditor will not provide credit for the next time.
This is the financial.
Okay, na financial difficulty. Okay, na?
Okay, sir. Okay.
So next benefit for the management is redemption of long-term debts. Planning for redemption of long-term debts. Say yes or no?
Yes, sir.
So planning for redemption. What do you mean redemption? Repayment of long-term debts. You have taken loans from longer period. So excess working capital is there with you. By using that, you can repay the loan so that your debt position will come down. Say yes or no? So excess working capital can be utilized for the payment of long-term debts. Then company is free from long-term debts whenever repaid. So whenever you prepare the funds flow statement, 100% you will come to know that what is your working capital. Whenever you know the working capital, whether that is more or less or equal or excess, if excess is there, utilize it for the payment of long-term loans. Why need to pay interest again and again to them? So once you free from the debts, need not to pay interest. Not paying interest also one kind of revenue generation. Am I right or not?
Yes.
So not paying interest also, not making expenditure also, one of the kind of generation of income. Say yes or no?
Yes,
then planning for redemption of long-term debts. Then I want to start by giving one more about this benefits for the management. Ascertaining funds from operations. Ascertaining funds from operations. What do you mean by fund from operations? By operating, you are creating fund, you are generating revenue. So funds from operations. By doing the business, how much fund you are generating, how much revenue you are generating. Okay.
By this profit, we can be justified.
Right. So at least after justification of revenue, compare your expenditure, matching concept. Compare your expenses with the revenue. If revenue is more, expenses are less, profit. If expenses are more, revenues less, losses. Simple.
Yes. Yes.
So these are the benefits for the management of funds flow statement. Say yes or no?
Yes, sir.
So whenever a user's benefits, importance, advantages are there, immediately some limitations will be there. For any science, for any subject, Limitation 100% will be there. Now we will
Yeah,
discuss about
correct.
the
Limitation.
limitations of funds flow statement. No disadvantages,
No,
limitations.
okay.
Okay, so next we are going to discuss about the limitations of funds flow statement. Say yes or no?
Yes, sir.
Right.
Yes, sir.
Then whatever statements you prepare, that will be prepared on the historical data only. What data is available in the accounting records, that only will be utilized for the preparation of the statements. Am I right or not? Then what information will be available in the accounting records? What happened will be recorded. What happens will not be recorded.
Okay.
So funds flow statement will show the history only. It's historical in nature only.
Okay.
Funds flow statement is historical in nature. Historical in nature. What happened will be shown. What happens, what would be happened, not to be shown. That is your decision. That is your prediction for the future. But funds flow statement, whatever you prepare, data will be collected from financial accounting records only. Data available in the financial accounting records is the history only, happened things only. So happened things is nothing but historical in nature. So funds flow statement is historical in nature. That is the first limitation.
First limitation.
Okay. No?
Yes, sir.
Then funds flow statement preparation is nothing but rearrangement of data which is given by the financial statements. Whatever information available in the financial statement, that is income statement and balance sheet, that we are rearranging. That's it. You are not doing anything new. Rearranging the data according to the requirement. That's it. So second one is just funds flow statement is rearrangement of data which is given by the financial statements.
Okay.
Funds flow statement is not original. That is a statement of rearrangement of data which is from financial statements. Ante.
Okay. Means this is previous data.
That is previous decision. The data
Yeah.
already presented in the financial statements.
Yeah.
That data we are taking and rearranging.
Yes, sir.
So that arrangement is different according to the income statement and the position statement. Now we are arranging according to funds flow statement. That's it.
Okay.
Rearrangement of data which is available already arranged in financial statements.
Okay.
Kabatti, that is the reason funds flow statement is not original. That is only the rearrangement of data which is given by the financial statements.
It's original, but last previous data was.
Original means this data should not be available in anywhere other statement, right?
Okay.
This statement will be prepared by taking the information from the financial statements only, either income statement or the position statement.
Okay, sir.
So data already presented in those statements, those are the originals.
Okay, okay.
From that we take information, we present, we rearrange.
Okay.
Okay, na?
Okay, sir. Sir, when we are doing this problem, sir?
When means next class we go for.
Tomorrow we have the next class, sir.
Tomorrow we are having class.
Yeah, yeah.
So I come back to the class.
Sir, you have missed the previous class, sir. Then you will arrange in the future, or gone is gone.
ऐसा नहीं है देखेंगे क्या है.
Okay, okay, sir. Okay.
Right.
Okay.
Then third limitation for the funds flow statement is continuous changes will not be revealed by the funds flow statement. You are preparing based on the financial statements, means at the end of the year you can change, you can know the changes in the working capital, but continuous changes will not be given. On the day you are preparing by taking information from the financial statements, on the day you know what is the position of working capital, but continuous changes in the working capital you cannot know by funds flow statement. It cannot reveal continuous changes. It cannot reveal continuous.
Okay, sir. All right. Okay, sir. Next
Then
one.
next will be some transactions will not be considered which cannot which will not affect the working capital.
Which will not affect
the transactions which not affects the working capital will not be considered. So some funds will not affect the working capital. Those kind of transactions will not be considered.
Okay, sir.
Okay. Then last limitation for the funds flow statement is this statement will not reveal cash position of the firm. This statement will not reveal the cash position of the firm. Cash position of the firm will not reveal the cash position of the firm. Okay, na?
Sir, if they are not revealing, then how they are taking the decision?
Fund inflow,
Okay,
outflow,
okay,
how
okay,
much fund you are having will be, how much cash
okay,
you are having will not be revealed.
okay,
Cash
okay,
means exactly what is in your hand.
okay, sir.
Then how much cash you are having, that will be revealed by cash flow statement, but not by funds flow statement.
Yeah,
Okay.
okay,
So
sir.
these are the limitations. Then last point for this today class is steps involved in the preparation of funds flow statement. Whenever you want to prepare a funds flow statement, how to follow some steps. If you know
Okay,
these steps, then we go to preparation of statements. Okay.
okay, okay, sir.
Next steps involved in the preparation of funds flow statement. Five minutes, Amma. Inko 5 minutes. Okay. Steps involved in the preparation of funds flow statement.
Okay, sir.
You write these steps. 4 steps are there for the preparation of funds flow statement. This
Okay,
is very
first
important. How many steps?
4 steps.
4 steps. Step 1. Okay. First step, preparation of schedule. Preparation of schedule. Preparation of schedule
Schedule
of changes in working capital.
changes in working capital.
Preparation of schedule of changes in working capital. Say yes or no?
Okay,
So whenever you identify the changes in the working capital, you have to compare current assets and current liabilities. Now you have to total the current assets by taking from the balance sheet. Then you have to take the totals of current liabilities from the balance sheet and compare it.
That
That
is
is what
current assets minus current
current assets
liabilities.
minus current liabilities. So you will get the working capital. So
okay,
okay.
Yes, sir.
So you will get the working current assets are more, current liabilities are less, increase in the working capital. Current assets are less, current liabilities are more, decrease in the working capital.
decrease in working capital. Correct.
Okay, na? This is the first step. So first you have to identify the changes of working capital. For that purpose, a schedule to be prepared. Ante. Say yes or no?
Second point.
Yes, sir.
Right. Second step, step 2. Prepare necessary ledger accounts. Prepare necessary ledger accounts. Necessary ledger accounts to identify. Prepare necessary ledger accounts to identify the hidden transactions. Identify the hidden transactions. Hidden transactions from the non-current assets and non-current liabilities. From the non-current assets and the non-current liabilities. What do you mean by non-current assets, non-current liabilities? The assets which are not in the nature of current will be called as non-current. All fixed assets will comes under the non-current assets. Am I right or not?
Yes, sir.
So current liability, non-current liabilities means which are not current liabilities remaining. If any changes are taking place in this, those also to be identified by preparing those ledger accounts. By preparing what accounts? Those ledger. For example, plant and machinery change is taking place. Last year balance sheet is showing 1,20,000. Current balance sheet is showing 1,30,000. Change has taken place 10,000. What happened? Why that change has taken place? Plant and machinery has to be depreciated every year, so has to show less balance, right?
Maybe we have purchased another asset.
Maybe. So you have to see the hidden transactions of investment also, flow of fund. Purchase చేసినట్టు fund బయటికి వెళ్ళింది కదా, flow of fund going out కదా,
Yes,
fund
sir.
is going out కదా. So that you have to identify the hidden transactions which are affecting the non-current assets and non-current liabilities. That is a step 2. Say yes or no?
Yes, sir.
Step 3. Compute compute the fund from operations from revenue, expenses, and incomes. Compute the fund from operations. Compute the fund from operations from revenue, expenses, and incomes. Revenue, expenses, and incomes. What do you mean by revenue, expenses? Expenses can be revenue, expenses can be capital. Capital expenses, revenue expenses will be called. Capital incomes and revenue expense, revenue incomes will be called. Capital expenses are nothing but any expenditure you made to acquire the asset will be called as capital expenditure. Are you understanding?
Okay.
Capital income is nothing but by selling any asset, any fixed asset of the company, generating income will be called as capital revenue. I'm having an asset which is with the value of 1 lakh, but I sold for 1,20,000. How much income I generated?
20,000.
20,000. That 20,000 will be called as capital income. Say yes or no?
Okay.
Yes, sir.
So in regular course of business, if you generated any income, that will be called as revenue income. In regular course of business, any expenditure you made, that will be called as revenue expenses. Incomes and expenses relating to the assets, capital assets, will be called as the capital incomes, capital revenues. For example, asset value is 1 lakh, I sold for 80,000. How much loss I got? 20,000. That will be called as capital expenditure. Otherwise, I made a standard, for example, a machinery is there, I made repair expenditure for the repairs 20,000. Then that will be called as capital expenditure. Regular maintenance is the not capital expenditure, that is revenue expenditure.
Fourth point is?
Hello?
Yes, sir. Fourth point?
Third only I am saying. Revenue
Okay.
expense, capital expenditure difference I am saying here.
Okay.
So capital expenditure means whatever machinery you are having, for that regular maintenance you are, for example, you are having a motorcycle.
Okay.
Every 2,000 kilometers you give for the servicing.
Correct.
That is revenue expenditure only, not capital expenditure. For example, tire karab ayipoyindi, tire is not good. Now you are changing the tire. That is the capital expenditure.
Okay. Okay.
For example, chain of the motorcycle is broken. Then you are arranging new chain. That is not a revenue expenditure, that is a capital expenditure.
Yeah.
Okay, na?
Yes, sir.
Then fourth step is preparation of funds flow statement. Fourth step is preparation of funds flow statement. Say yes or no?
Yes, sir.
So these are the 4 steps will be involved. First one, identify the changes in the working capital. Next one, identify the hidden transactions from the non-current and non-current assets and current liabilities. Non-current liabilities. Step 3, identify funds from operations. Funds from
operations.
funds from operations. Regular course of business, how much fund you generated. In regular course of business, how fund you generated. Then step 4, finally preparing the funds flow statement.
Okay.
These 4 steps will be involved. We follow the same steps, then our problem will be completed. Tomorrow we are going to do one problem.
Okay, sir.
See
Same
you
time,
then.
sir. Sir, your schedule is prescribed in the schedule, sir.
Schedule is
So
3 to
you will
4:30,
follow
right?
that or your schedule, sir? Because somebody is taking, somebody is not taking.
My time is 3 to 4:30.
Sir, in the schedule that is different, sir.
No, in the
Marketing.
schedule I have received from our HOD, sir. Clearly mentioned my schedule is 3 to 4:30.
Sir,
In
but
the
while
website, they have
logging in,
given
it
like
was showing marketing management.
Can I say I'm opening that schedule and saying UC? Just you write it otherwise.
Okay, sir.
So because official information forward to us. Okay.
Okay, sir.
So marketing management 10:30 to 12.
Okay, sir.
OTB 12 to 1:30.
Okay, sir.
FM 1:30 to 3.
Okay, sir.
AFM accounting for manage my subject 3 to 4:30.
Okay, sir.
BE business environment 4:30 to 6. So last time what happened, she might not know her schedule, so that she has taken my class on that day, I think last
One class has missed, sir.
last class. No issues, we cover. Okay.
Sir, till
Okay,
now,
sir.
how much like portion is completed?
So almost see what I completed. I'll tell you once.
Sir, within 2-3 days we can complete, sir, because today is the second day of offline class, online class.
Block 1 already completed the regular classes.
Sir,
Then block 3, block 2 also ratio analysis completed.
sir, we are saying completed. Just we have written the formula, sir. You know this one.
So boss, real written formulas is enough.
Yes,
You know
sir.
what that's only calculation part you have to do. This is not regular college, right? Regular classes, right?
Sir, we are. If you
No
know this
issue. We do some
then we
problems.
can
No,
calculate.
don't worry. We do okay.
Okay. Thank you very
Don't
much,
worry.
sir. Okay, sir.
Right then. Bye. See
Okay,
you
sir.
then. See you all of you.
Sir,
Okay.
so one more question.
Hmm.
So like this is my first ever class, either it is online or offline.
Okay.
So like even though if we completed this block 1, block 2, I'll try to cover it out. So
Okay.
any idea like when can we have our exams?
I don't know, ma'am. You have to ask your center.
Okay, this
Otherwise,
is the later problem.
this
It's
is
we will inform
my
you in
work.
the group.
My work is only to take classes. When you will have exams, I don't know. I cannot give idea about that. Okay.
Sir, and one more basic question which I don't know, I'm not having clarity.
Mhm.
Like so this program is of 2 years and we'll be having 2 semesters or 1 semester per year.
This is year-wise.
Year-wise scheme, not semester, I think.
Okay, sir. Okay.
So 2 exams, first year, second year. That's it.
Okay, sir. Thank you, sir.
Right.
Sir, will any assignments will be given?
I don't give anything. That is university issue. Mine is only teaching. That's it. Okay. Only
Okay,
to
sir.
this is the counseling classes. I'm the we are the counselors, not teachers, not lecturers. Just you counsel you how to study. That's it. Okay.
Okay, sir. Okay.
Right. So you
Thank you,
have
sir.
to work more. That is the reason this is a distance education, right? You
Yes, sir.
have to learn more. You will get less information. That is the reason much information will provide in your textbook only.
Yes,
Okay.
sir. Yes, sir.
So your textbooks are so good.
Yes,
Okay.
sir. They are elaborate.
Right. See you then.
Okay. Thank you, sir.
Bye.
Okay, sir. You are also. If you assist, then we will go, sir. If you are not interacting with us, how we will can? How you will assist to us, sir? Correct or wrong, sir?
But whatever happens, but you are the last beneficiary. You have to cover that.
What, sir? What way? Sir, it is somebody take or not take, sir. This is the loss of the student. If somebody is interact or not interact, if the student is not understand, this is the loss of the student, sir. Whatever the aspect is there, but the loss of the student only. Correct?
Yes. Okay, then see you.
Okay, sir. Okay, sir.
Bye.
Okay, bye.
Okay,
Thank
sir.
you.